Welcome back to the channel, Savvy Investors. Today, we're diving deep into a stock that's popping up on our hard-to-borrow screener, Global Interactive Technologies Inc., ticker symbol GITS. We'll explore why this particular stock is raising eyebrows with its astronomical cost-to-borrow fees and what that could mean for its future price action. Stick around as we break down the mechanics of short squeezes and analyze GITS specifically. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with a quick introduction to Global Interactive Technologies Inc., or GITS. This company, with a current market cap of about $7.08 million, operates in the communications services sector, specifically within internet content and information. Through its subsidiary, GITS focuses on technology platforms in South Korea, notably operating and developing Filing, a digital fan engagement platform. Filing is designed to support online fan communities, content discovery and sharing, and user interaction. It's a niche but growing area. Interestingly, GITS has seen some significant price movement recently, up over 51.43% in the last 30 days, although it's been pulling back slightly in the very short term. What is cost to borrow and why it matters? So, what exactly is cost to borrow, often abbreviated as CTB, and why should you care? When a short seller wants to bet against a stock, they first need to borrow shares from a broker. They then sell these borrowed shares, hoping to buy them back later at a lower price and return them to the lender, profiting from the difference. But borrowing shares isn't free. Brokers charge a fee for this service, and that's the cost to borrow. This fee is typically expressed as an annualized percentage. The higher the CTB, the more expensive it is to hold a short position, and this cost can quickly eat into or even exceed any potential profits for a short seller. When you see a CTB fee exceeding 100%, it means that if the short position were held for a full year, the fees alone would cost more than the original value of the borrowed shares. Why this stock is hard to borrow right now. Now, let's look at GITS through this lens. Global Interactive Technologies Inc. has appeared on our hard-to-borrow screener with an astonishing annualized cost-to-borrow fee of 939.4%. Let that sink in. That is an incredibly high fee, indicating extreme demand to short the stock combined with a very limited supply of shares available to borrow. Our data shows GITS has an estimated float of 2.4 million shares. While the exact number of shares currently available to borrow is unknown, this sky-high CTB strongly suggests that very few shares are left for new short sellers. Our internal composite squeeze score for GITS is 44.3 out of 100. While not the highest score we've ever seen, it certainly highlights the significant pressure from the cost-to-borrow aspect, making GITS a fascinating case study. Squeeze mechanics explained. This brings us to the core concept, the short squeeze. Imagine short sellers are paying nearly 1,000% per year to bet against GITS. If the stock price starts to rise, perhaps due to positive news, increased retail interest, or simply more buying pressure, these short sellers face a double whammy. Not only are they losing money as the stock goes up, but their borrowing costs are also through the roof. At some point, the pain becomes too great, and they are forced to cover their positions, meaning they have to buy back the shares they borrowed to return them. This forced buying creates even more demand for the stock, driving the price up further, which in turn can trigger more short sellers to cover, creating a powerful squeeze effect. It's a domino chain of buying pressure. However, it's critical to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock is fundamentally overvalued and are willing to pay a premium to maintain their bearish bets. Dilution risk check. One major factor that can completely negate a short squeeze thesis, even with high cost to borrow, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. While this can raise capital for the company, it also reduces the ownership percentage of existing shareholders and can depress the stock price by increasing the supply of shares. For GITS, we've good news on this front. Our check found no recent dilutive SEC filings such as SMINUS-1, SMINUS-3, or 424B in the last 90 days. We also found no recent reverse split for Global Interactive Technologies Inc. within our look-back window. This means that, for now, the potential for a new share issuance to artificially increase the supply for short sellers to cover with, or to simply lower the per share value, is not an immediate concern for GITS. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you keep an eye on with GITS? Today, the stock is down 7.2%, and over the last 5 days, it's seen a 5.78% decrease. This short-term weakness contrasts sharply with its 51.43% gain over the last 30 days. Volume is another crucial indicator. Today, GITS traded only 42,000 shares, which is significantly lower than its 30-day average volume of 1,428,846 shares. This extremely low relative volume indicates a very quiet day, possibly suggesting a lack of immediate catalysts or significant institutional interest. For a short squeeze to truly ignite in GITS, you typically want to see a combination of increasing buying volume, especially on green days, continued high cost to borrow fees, and further decreases in the number of shares available to borrow. Given its relatively small estimated float of 2.4 million shares, any significant buying pressure or short covering could lead to amplified price movements. Global Interactive Technologies Inc. presents a fascinating case study in the world of hard-to-borrow stocks, driven by its eye-watering 939.4% cost to borrow. While the conditions for a short squeeze are certainly present, with high fees and a relatively tight float, remember that these situations are highly speculative and volatile. Always conduct your own thorough due diligence, understand the risks, and make informed decisions. We'll continue to monitor GITS and other stocks like it. If you found this breakdown of GITS insightful, please hit that like button, subscribe to the channel for more unique stock analyses, and let us know your thoughts or questions about GITS in the comments below.